Time to welcome back to the show Rob Lees from Mortgage Choice Blue Mountains and Penrith for our weekly finance segment. And today, Rob, we're going to revisit a topic from last year.
That's right.
Yep, loans for the self-employed.
Yes.
Rob, really important issue for our listeners. So in what ways is applying for a loan different for self-employed people compared to a personal people who are employed?
Yeah, it's really about the income verification or the documentation that we need to verify income. So for an employed person, it's a lot simpler. It's normally just a couple of payslips and perhaps a group certificate, or used to be known as a group certificate, or an employer PAYG summary. And that's normally sufficient. For some lenders, it's just one payslip, and that's sufficient to confirm income. Whereas for the self-employed, it can get a lot more complicated. So normally the preferred documents that are required are tax returns and financial statements, or as a secondary thing, if that isn't the best way to confirm, it might be a low doc loan or a self-certification of income.
And Rob, is it right in sort of saying most institutions will want 3 years history of...
No, generally no one will want 3. They'll only want 2 as a maximum, and there's one and another one that's coming online soon that will only want 1 year.
Okay.
So that's good. But there's all sorts of complications with some self-employed people, in terms of their income and the structures of their organisations, and there might be multiple partners and all kinds of things that are going on, or loans within the business that can make it a lot more complex.
Okay, so can we just expand a little bit on some of the challenges that self-employed people commonly experience in applying for a loan, and perhaps some solutions to those challenges?
Yeah, so the big challenge, it's all around income. So you're not going to get a loan unless you have income that supports or can service that loan. Otherwise, the lenders won't approve it.
Okay, so if I've started a business, I've been in business for 6 months, I need a loan.
It's going to be
very
difficult.
Where do I go? What do I do?
It's going to be very difficult, Vend. And that's the challenge. That is the challenge. So those sorts of situations where someone might actually go from being employed to even being a contractor in the same kind of work, if only 6 months in the job, there can be difficulties then in obtaining a loan.
Rob, as you know, with small business, you can have good years and less good years.
That's right.
Do they take into account, cash in the bank as well? So, for example, let's just say 1 year, a couple of years you've had a fantastic year, but 1 or 2 years has been really, really tough going, but you've got the cash in the bank. Does that factor into the equation in terms of the loan, or does it actually have to be earned income in that financial year?
Cash in the bank helps the balance sheet, so it makes a stronger application. But it's about income evidence. So and it's the current year is always the most important year. So if you had big earnings in the previous year and this year was down, they'll take this year. Again, generally, there's a lot of differences between lenders in the way they calculate that, but generally it's going to be the most current year is the most important.
But what do you do if your loan is due and you're a small business and you've had a particularly flat bad year and you need to renew the loan? I mean, are you saying, well, you have got very little chance of actually getting renewed if you've got a bad income?
Show me the numbers. And that's basically what I do. It's really just... It's looking at the situation, and what I do is I work out solutions. So I had, and I guess this is what prompted this for me. This week I had a fellow who has a very good asset position, and he owns multiple properties, and he found a block of land he wanted to buy, and for $600,000, and he didn't have the income evidence. And I said, show me your tax return. His tax return for 2013, so he hadn't done 14, only said about $30,000. And on the basis of that, I couldn't do what you would call a full doc loan. So there is other ways to do it, and we ended up getting the right level of income via a low doc loan, and with self-certification where he declared a particular level of income. He supplied BAS statements and an accountant's letter, and it was actually finding a lender whereby he was able to declare a level of income that was perhaps a little higher than most lenders would allow him to declare, given the BAS statements that he provided. And there was reasons for his income going up a little higher, and who knows, look, cash income, I mean, I don't know. There was probably a bit of that. But also he started a new business as well that also affected his income. So it was quite legitimate from the accountant's point of view to actually sign off that 80,000 or whatever it was he declared was a reasonable estimate. So I guess that's my job when I meet with self-employed clients, trying to look at the numbers and trying to work out the best way to put this up to the lender and to the lender that's going to have a policy that's more favourable to their situation.
Okay, but if you, for example, have enough equity in your own property, I guess you could put that up against the loan you're trying to.
Yeah, you can,
make,
and that was the thing for this fellow. He just couldn't believe at first when he said this was his income that they wouldn't lend, because he said, I've got all this equity, and the equity strengthens the deal. But if you've got no income, they're not going to give you a loan. So again, equity allowed him to actually apply for a low doc loan in the way that we did, but it's not a slam dunk just because you've got a lot of equity. You could have millions of dollars of equity, but without sufficient income evidence, you've got to have income to prove serviceability of the loan.
You've mentioned low doc loan a couple of times. Can you just explain what that is to us?
Yeah, it's simply a small amount of, or a different type of documentation that's used to support income. So the preferred documents that are required for self-employed people are tax returns, financial statements, and financial statements. So if they're not provided, and there's a reason for not providing it, then you can, if the percentage that you're borrowing against the equity of the property is lower, then you can then qualify for a low doc loan. And it's basically a self-declaration. You say what you're earning, and that's supported by those statements, or it might be bank statements or an accountant's letter as well.
Thanks, Rob. Well, let's play a little bit more music. Here's Luther Vandross with Never Too Much. That was Luther Vandross with Never Too Much. And we're back with Rob Lees. Rob, so what can self-employed people do in terms of strategies to ready themselves for, if you like, loan readiness, given they are self-employed?
Yeah, actually, we've just been talking about this off air, and because we're all self-employed, and we've between us here, we've been having a little bit of discussion, and I suppose that's really the answer, that education is very, very important. So, and preparing in advance for that, rather than finding a property and saying, I need finance and I'm self-employed. So I meet with a lot of self-employed people, and sometimes it's just an informal discussion to look at where things are at and what needs to be in place to get a loan application over the line. But the basic things I'd say is, firstly, keep your tax returns up to date. It can be an issue if tax returns are too old, and I've had that sort of situation. People find a property and suddenly they're on the accountant's back to get their current tax returns lodged so they can buy this property. Keep them up to date. Make sure they're lodged. The second thing I'd say is look, there is a cash economy, and if you take cash income and don't declare it, it'll come back to bite you when you apply for a loan. You can't have your cake and eat it too. So it's important to put the cash through the books. And part of that, I suppose, is even for someone like me, it's working with the accountant sometimes in ensuring that what's being reported and the sort of level of income that's being reported in the tax returns is going to be consistent with what you're needing in order to obtain the loan. But I'd just simply advise, I'd advise to just have a meeting. Let's talk about it, and we can work out what strategies we'd need to put in place.
Yeah, so like most things in life, preparation is key.
Oh, yeah, absolutely.
Don't leave it till the last minute, and particularly if you're self-employed. I mean, not just financially, but for your business as well. You need to think ahead, you need to prepare early, and you need to get your information together for that time that you do need to take action or put something in place, like a loan.
Absolutely.
Okay.
All right. Thanks, Rob. That's Rob Lees from Mortgage Choice Blue Mountains of Penrith, and you can contact Rob on 47399749 or visit their office at 3/13 Hope Street, Blaxland.